That's the funny thing, right? 2021 was a crazy year. I didn't anticipate what happened this year, and I think no one really did. The market just keeps getting crazier.
Yona is a business director and cost segregation expert at Madison Specs. He has assisted clients in saving tens of millions of dollars on taxes through cost segregation. Yona also is a real estate investor and host of the popular podcast Wise Advice.
Thanks for that intro. How you doing?
Absolutely good. Glad to have you. So I've followed you, and I've seen you all over social, which is good because that's what you're doing, right?
That's it means
And
it's
then,
working.
yeah, that means it's working. And then I saw you in I think it was Orlando a few months ago, and I mean you're easy to pick out of a crowd. I was like, hey, I know that guy. I gotta go say hi. So I was glad we were able to connect, and then now connect on here. So topic of the hour has been real estate in 2022. What can we expect the real estate market to look like as we get into next year?
It's been so unpredictable over the past 2 years, ever since the differences and what's happened with COVID, the lockdowns and everything like that, and now different states are talking about different lockdowns and things like that. So it's very difficult. Obviously, I'm not a psychic or a prophet, but I would venture to say that things are going to just continue the way that they have gone. And what we've seen is that at the very beginning of COVID, there was a lot of trepidation, and people, just because of people didn't know, right? I think the majority of the world, or at least the United States, especially the real estate market, has gotten used to the unknown. So people have gotten used to working from home. People have gotten used to doing, Zoom calls and everything. And obviously, it was great to meet in person. It's great to go to these networking events and things like that back in person. But I think technology has really accelerated the game in many aspects, especially with doing things remotely. So I think we're going to see a lot more kind of tech oriented integrations into real estate investing, I think, in the coming year.
Yeah, I think it fast forwarded the timeline. I forget who said this. It was like 15 years. It was such. I mean, this show was birthed out of that. This show was actually a local event. It looked much different because we actually tried to bring the event online, and it was like, okay, it doesn't really work the same way, so we changed it to more of a radio podcast type show. But yeah, everything has changed. I mean, we're getting real estate agents actually having virtual showings and even doing virtual signings. Virtual closings, and that's actually a topic to where having digital and type virtual actual closings with certain title companies, that is very new, but it's happening. Now we're talking about metaverse, and I'm like, well, and then we got eXp Realty's got eXp World, this whole virtual campus for their entire company, and other company like COVID, and so other companies are doing that kind of thing. Change has definitely been very common.
Yeah.
So, you're tax expert. Would you consider yourself a tax expert? I know you're definitely an expert on cost segregation.
So cost segregation is really the main thing that I focus on. That's what our company does. We're actually not an accounting firm. So I wouldn't consider myself a tax expert, but within real estate taxes, I have a pretty good grasp on it, and the specifics surrounding cost segregation, I probably know more about than 99% of CPAs out there. So
yeah,
there, those specifics.
That's really in relation to at least passive losses, depreciation, and cost segregation, which is depreciation on steroids. I guess give a 10, 15 second summary of what that is, because that'll set up my next question.
Sure. Depreciation is a tax deduction that you get when you buy a property, anything besides your personal residence, investment, or business property. It takes the purchase price and basically divides it up over a very long period of time that you get to take this income tax deduction. What cost segregation does is it accelerates some of those deductions from that pool of potential deductions you could take over a 39 or 27.5 year period, and front loads a whole chunk of them into the first year or into the first several years. And so it's a strategy to use those potential income tax deductions now when you can use them and need them most.
So how that sets up the question, we've seen a lot. I mean, real estate's been hot. The investor side of real estate is growing and growing and growing, and that is unfortunately the negative part of that causes extra problems for affordability for actually owner occupant
Right.
properties. But it is what it is. Investors are moving in, and a lot of them are moving in because they love. I mean, they have W-2 incomes, but they need they need to invest. They're not really sure if they want to go into buying index funds at the record prices they're at now, and they want real estate. But one of the biggest benefits for those types of investors is depreciation. What have you seen over the last 18 months with real estate and those type of investors? I'm gonna classify them. They're passive. They're passive investors. They're not folks maybe like us that are in the game. Have you seen an uptick in those passive investors, whether it's through a syndication or just an individual passive acquisition, acquiring properties? Or have you seen an uptick in that? And do you see any changes going into 22?
Sure. There's certainly been an uptick. When there's more knowledge out there, especially, since the past few years, real estate and syndications, and it has become a lot more public knowledge, these forefronts. So there is getting a lot more information about there on many different levels. So for example, even Grant Cardone, just putting it out there to people, and then, those people might not work with him, but they're going to be doing their own research. You have a platform like Bigger Pockets that I remember, 3-4 years ago, where there's maybe, like 600,000 members. There's like this huge community, and now there's like close to 3 million members of Bigger Pockets. Things like that. It has grown. So there's definitely a lot more knowledge out there, which has introduced this to a much broader base of investors. They are coming in and using this type of investment to get this, as you mentioned, the tax benefit depreciation, which really benefits them in the investment itself. And so it is a tax friendly sort of investment. However, it not necessarily going to benefit them for, to help offset their W-2 income. That's something that I think is a lot of misnomer. People think that, you can use these.
Because of the real estate professional designation.
Correct. Yeah. I mean, there are certain kind of loopholes and certain different ways to get around that. But by and large, the main benefit is that, here you have this investment. And guess what? If you're doing, and these sponsors doing a consolidation using that bonus depreciation, then you essentially are going to get these returns during the hold period of that property, going to be completely tax-free. So that's a benefit that I think a lot of people hadn't seen with other types of investments.
Which that tax-free return that you're getting ends up, if you're doing it right, compounding your rate of return, because if you're able to roll those off and reinvest those into other assets, time value of money, accelerated, that's the game.
That's what it's all about.
The wealthy play,
That's
right?
the name of the game. Exactly. That's what it's all about. All
right. Any final thoughts on what you're anticipating in 2022?
I don't even know. That's the funny thing, right? 2021 was a crazy year. I didn't anticipate what happened this year, and I think no one really did, in terms of, the market just keeps getting crazier. You have tertiary markets getting much more attention. Different asset classes like self-storage and mobile home parks are getting, single families, Airbnbs, getting a lot more attention by a lot more people. And, I'm just excited to see what's going to shift and what's going to transition to 2022. It's certainly going to be something. You're not going to see, you are going to say, I'd rather put it in the positive. You are definitely going to see new things and new asset classes or new things, whether it might be industrial, taking a big, rocket fuel to it. Who knows? But I'm definitely looking forward to see what that's going to be.
Yeah, well, for me, one thing that's been interesting to watch is how office space is going to play out. And I think at least from what I've read, it's still more of a longer timeline. We don't necessarily know, because retail is a big question, but it's actually done okay. You mentioned industrial and warehouse space, which has just been going crazy. And then, multifamily has been nuts. So, all right. How can folks reach out to you?
Best way to find me is on LinkedIn. I'm extremely active on that platform. So if you are watching this and you have a LinkedIn account, definitely reach out, send me a message there, or you can go to yonaweiss.com. Just my name, just spell it out, .com.
Thank you very much, Yona. Look forward to connecting with you at another event soon. And thanks again.